Alright, the recording is also running. I've got the chat open. If there are any questions. I mean, we've already caught along right here on of this volume imbalance basically into buy-side liquidity. This morning I did not expect or anticipate London, or let's say more or less the gap time in between London and New York, to run out the previous week's high. So it's kind of unfortunate, at least a little bit, because that would have been a great target. We almost hit the high of the year 2023. Let me actually go up to the higher time frame here. Let me put all of this into today's folder and hide that quickly, show our 1 hour analysis. And on the 1 hour we can actually see that we got really close. We missed the 2023 high, December high, by 1 tick, and now we're starting to retrace. I want to catch the retracement. I don't want to get in once we've already done that. That would kind of beat the purpose to me. Besides that, you can also check the 4 hour time frame. I've done some analysis right here too. We see we swept most of the buy side, but we didn't take out the high on the 27th of December. That's still holding up very strong. We have a inversion fair value gap down here on the 4 hour time frame. We also have news at 10 a.m. So we will see how the consumer sentiment news at 10 a.m. with the new 4 hour candle. You can see only 39 minutes left. At 10 a.m. we get that next 4 hour candle. What they will do, what kind of impact they will have. So going back to the 1 hour now, we've hit buy side. I think that's easy to see. Now we are retracing, and really just look for a scalp here because we've already expanded so much today. If we look at the opening here, 18, this is our daily candle, more than 30 points prior to the New York Open, which most of the time leads to a choppy AM session. And I'm really not up for that on a Friday because Fridays for me are always more about capital preservation than generation. It just doesn't feel good if you worked hard all week and because you feel like you want to make some more profit, or for whatever reason basically, you just get carried away, lost in a moment, taking trades that are too big in size or trades that you don't really want to take, but you still take them. Like I said, if you just lose it, we all know what it feels like and what it is like. Having that on a Friday, carrying that over into the new trading week next week, because you very likely lost something or a good portion of your profits. That's gonna annoy you the entire weekend every time you think about trading, and then you start again on Monday, and it's not really a good feeling, or it's better to avoid that emotional baggage. That's what I like to call it. We like to carry that around with us. So now we have a bearish value gap here. I very much like that. What's the time? It's 9:20. Now I'm gonna get in on the order block, breaker block right here. Let's see how that plays out. I know we're at the Viva when we could bounce from here and retrace back into that. We just hit the 1 hour bearish value gap, at least with 1 tick right here. But, well, we've been going up the entire day. Don't also want to sound contradictory to what I just said, but it's the take profit trader challenge. Now actually that I'm saying it out loud, might be better off not taking it on that one because of that. Or at least not with a mini contract. We just leave it here, say board setup prior to the New York Open, see if it plays out. And gonna get in. One second. Let me open up MT5 on my phone. There I have a little bit of more room to, breathe and play. So I'm gonna take it on my 100k challenge. Can also take a paper trade here, but I mean, I started it 2 days ago. We're almost through with the challenge. 4% in profit. Almost. We took this little long ride here this morning in the tape reading live stream, or, well, tape reading session on Discord, not live stream. I still want to practice on this example, so let's enter with one contract short. On paper, of course. Another one on the breaker block. Like always, if there are any questions, feel free to ask. I've got the chat right open. Alright, we already tapped and rejected. 925. Ah, damn it. But well, at least I got in on my funding pips challenge. Well, that was a quick one. Let's see, we hit the 50% retracement level of the entire daily candle. My take profit target, I haven't actually thought of that yet, to be really honest. I wanted to see that breaker block being initiated first, really. So a 2-to-1 risk reward and look for 10 points. So we drop deep into our 1 hour fair value gap right here. We extend that out. Let's see, we have 3.5 minutes until the New York Open. Maybe we just get the collapse. Let's take a look at NQ. Already checked. There is no SMT divergence between NQ and ES. Both made higher highs here. See how this plays out through the New York Open. I hope you all understand this setup, the model, the market structure shift, breaker block, bearish fair value gap right here. Not looking to get in on a optimum trade entry up here or bearish fair value gap, an inversion fair value gap in here. I'm not interested in that at all, actually. I want to see the continuation from here because at this point in time, I anticipate that retail longs are trapped long. And if market makers would offer them a chance to get out at break even, they might take that and market makers would make less money. So bringing it all back up into this range before taking it lower wouldn't really make too much sense. And also, before the session, before I looked at this potential setup, if we invert the scale, what do we see here? I mean, first push, second push, third push, fourth push to the downside. Nice market structure shift paired with a breaker block. Lots of buy side in this scenario to be taken. I could see that Asia high being a potential target. Not sure about you, but I could see that with this nice displacement. We will see what the news candle will do, but that's just my gut feeling. That's why I, considered going in on the TPT account. But yeah, just like we said before, I made the decision not to enter. It's Friday. If I don't, especially with mini contracts, it would have been a $250 loss. Not too bad, but still more than I feel happy to risk today, especially 5 minutes prior to the New York Open. I did not anticipate the 925 candle to immediately smack down like it did here, but yeah, just don't have enough room to breathe on with $500 max daily loss limit on the TPT challenge. But with the CFD challenge on my Funding Pips account, that's not an issue at all. That's why I entered there. That trade is running nice on profit. I have a 5%, so $5,000 daily max drawdown, and that's much easier to handle than a $500 daily max drawdown. Since we already had a profitable trade today, yeah, I'm calling it a day, at least for this account. Start again next week. Only $500 left. Should be done within 2 or 3 days. We will see. So New York opened up. We retraced below the 50%. Took sell side and discount. Next sell side target would be here at 4817.75. We filled our next fair value gap to the downside. My stop at this point in time is at break even. Here on my Funding Pips account, I secured some partials, but I'm gonna let the rest run. Quickly want to check what NQ did here. If NQ also, NQ also made that drop. Also 1 push, 2 push, 3 pushes to the upside, market structure shift, all that good stuff. I assume there are no questions about this. Our buy limit already has been hit. Let me just take a quick screenshot of that for Twitter. Well, I think I would lie if I would say that I'm happy about not taking it on my Take Profit Trader challenge. Yeah. But, well, I think it was from a risk manager's perspective, a good decision to make. Drop it like it's hot. All these longs, liquidate them. Let me actually make sure I take a few more profits. Letting the rest run all the way into Asia sell side. Let me just quickly open up Chrome. Did anyone catch it as well? I mean, we just started streaming right here and then we saw the fair value gap and I prepared to enter it. There would have been plenty of time. That if there are no questions, I mean, I'm just gonna let the trade, see if we hit the final target at the low of the day. Otherwise, we saw it yesterday too, how deep of a retracement we had into the daily range, filling this entire regular trading hours opening gap. Let's actually check it out. Where that regular trading hours gap would be. Right here, so pretty much the Asia session low. We'll see, let's be patient. Mm-mm. See if we have any questions right now. Yeah, we actually got some. Nice, thanks. Well done, Simo. You've got long with me this morning and the short. Nice. With full risk, or did you decide to play it cool because it's prior to the New York Open, prior to news, or? I didn't take a full percentage risk on that trade. I'd say like 0.5%. Yeah, same for me. That's also why I decided not to take it on the take profit trade account. It's just not worth the risk to see the New York Open pop up, hit my 5-point stop, and having lost, yeah, $250. My trade is also at break even. You mean I wouldn't care if I lose 250 on the funding pips challenge or even 8%? Because I have right now where the challenge is sitting at 14% room to breathe. Yeah, 14. So I don't really care. But with the future challenges where your stop is always trailing, it's a little bit more difficult, I'd say. I want to be really specific about the trades I take. And since we already made good profit this morning and the challenge is going pretty well, yeah, decided it's not worth the risk. Exactly. That's why I decided to jump in on a paper trade here on TradingView, but on the funding pips challenge, like I said, if you don't feel comfortable taking a trade prior to the New York Open, it's very likely because, yeah, you're too worried about your account. Not that that's a bad thing. It depends on the rules that are forced upon you with, yeah, the specific challenge or account that you're trading with. If you have enough room to breathe, 14% before the challenge is gone, of course you don't want to take unnecessary trades to lose those 14% until the challenge is gone. But yeah, well, I feel at least a lot more comfortable taking good setups. This was a textbook 2022 setup of a bearish fair value gap here. Still higher risk prior to the New York Open, but that just brings to show that, yeah, well, if there's a existing setup in play, we understand what market makers are up to, having trapped longs into the market via first push, second push, third push, and then that last final push, pump and dump, 1, 2, 3, 4, 5, straight up closing candles, hitting the previous week's high, engulfing that, market structure shift, bearish fair value gap. Like we said, if you're not sure, flip the chart on its head. Would you have thought that at this point in time we're gonna smack back down all the way to here? I think it's not really. Well, of course it's in the cards, and especially if you have to work with a 5-point stop loss. The best thing to do for my take profit trader challenge would have been a micro trade, but to be honest, I can't really be fucked having a micro chart open and executing on my funding pips challenges and all that stuff. So I prefer to just find good low risk opportunities and execute on them. I have a lot of work to do actually today. I'm gonna record the entire weekly recap and edit that and set it up to publish, and a few other things I have to get done because I'm going to Malta tomorrow. That's in Spain, a little island, until Monday. So I'm not going to be streaming on Monday, guys. There won't be a live stream. I will be back on Tuesday, but I think you guys should be well prepared by now. Let me just do some Twitter marketing at the same time. So we have a few more friends joining our lovely chats. Let's see if we have any questions. I'm done for the day, 2.35% plus 4% in London. Have fun, bro. Thanks, Simo. I also consider myself done for the day, really. Now we have news at 10 a.m. Might just, let's see. Where are we at? I'm pretty happy with that. I'm out of the trade. Good week. Take care, Samo. Random, but Matt, I left you a review yesterday on Bob. Let me know after later you can see it, cause thinking about it while typing, I was getting a little hyped there. I might have cursed and shit in comments. But yeah, heading out early, busy work day, great week trading, won't give back. That's the way. We'll be checking in and tape reading. Appreciate you guys. No worries. Enjoy the rest of your day and make sure to enjoy the weekend. I will be back on Tuesday. I will check out that WOP review. But it can't be too bad. I mean, yeah. Should be alright. It's an honest review. I really appreciate that. So, yeah. You too, Fady. Oh, man. So we just back at our previous day's high right here. Bouncing off that 50%. What's the time? It's 9:40, so that next candle is going to be a new 15-minute candle. Said happy with, yeah, plus 10 points. Got out right around the 50%, right in between here somewhere. Not that specific with where I get out. Just wherever I feel comfortable, and I think eventually we're gonna hit that Asia session low. We'll see what the news candle does. I mean, it's kind of weird that we didn't take out that December high. Would have liked to seen that happen first, because then I wouldn't have a single doubt in my mind that we are going to retrace. But since we didn't, and we still have that new day opening gap here, I could easily see the drop to the downside, and then traders get to the chart after news, or they waited to trade until after news. That's when they're gonna start to chop, and traders go long, short, long, short, long, short, long, short. They make lots of money with commissions and stuff. But yeah, the price isn't really going anywhere. It already made the move for London and as well for the New York session. The chop, you could consider it as complete. We had the 3 pushes to the upside, or 4 pushes actually. 1, 2, 3, 4. At that time, the probability of retail traders just jumping the gun and going long because they thought, oh, it's gonna explode now, I have to be getting in, is really high. That's when they turn it around, and turn it around very quickly, because if they wouldn't do it quickly and say offer a retracement all the way back up into here, well, it wouldn't be as easy. They would make less money. As simple as that. Because traders that got in right here, they're like, doesn't look like we're gonna continue higher. I might take a small loss, get out at break even, and if those get out at break even, well, there's less money to make to the downside. There's much more money. We talked about the example yesterday. I like to call the scenario the taking the stairs to the upside. First step, second step, third step, fourth step, and then taking the elevator to the downside. Or the bungee jump to the downside in some scenarios. And the whole dynamic to explain this would be traders being caught long. They might, didn't worry too much about their trade, or not coming back for the New York session, just letting it run. There are traders that do stuff like that. Not having placed a stop loss, or having trailed their stop loss below every short-term low right here, below every higher low that we formed. So basically from the beginning of the London session, and to take out those stops, if they would slowly creep their way to the downside, well, I think traders that have their stops, they would consider, might take profit. I think that's not going to go back up again. But if they, and then, by getting out at break even or taking some profits, again, market makers make less money to the downside. So they don't want you to get a sense of, we're going to drop this thing and take out all these stops before we maybe continue it back up. But that's the dynamic behind it, how I like to explain it. It doesn't have to be the reason why. It just makes sense that way. As long as it makes sense to the trader, that's all that really matters. If you can frame setups based on it, it's the only important thing. There are profitable traders out there using indicators, RSI and stuff like that. Their algorithms, supply and demand, they draw boxes everywhere. Yet they're still profitable, and they would explain their trade and why something that happened actually happened, explaining the reason behind it from their point of view. As long as it makes sense to the trader, in my opinion, that's the only important thing. And this makes sense to me, thinking like a market maker, using ICT concepts alongside that thinking. If there are any questions about that, feel free to ask. Yes, day trader. I tried to get it done this week, but I just had so much stuff to get done. I couldn't finish it this week, but I will get onto it next week once I come back from a little vacation, this little weekend trip. So after the stream, I'm also gonna end it early. I mean, well, yesterday PM session, we also killed it. Simply in the general chat here on Discord, caught the 1 minute time frame long into buy side, and then once we closed above, hang on, let me actually go to the 5 minute time frame in case you didn't see that. I mentioned on the Discord that once we close above this bearish value gap right here, I'm going to take a long. That would be the confirmation that we're going to run buy side. We filled in the entire regular trading hours opening gap and move away. Those are the scenarios where price just keeps on running. So I entered right here once we closed above the bearish value gap, target previous day's high, taking partials at the 830 high and this buy side liquidity. So it's actually a really nice move. So we could see something similar today, not denying that, not saying it's not possible. I mean, we have our gap once again, just right here. We still didn't take out that December buy side. We might leave that for next week actually. You just got a TPT account. I was up $700, then lost $300. So instead of 2K, now I have $1,700. Even though I am up 500, so the CFD account, I would be up 500. Hang on, let me make sense out of it here first. Then I can give you a good answer. Yes, that's right. So you made 700. You lost 300 of that. So right now, your max drawdown for this specific... It always depends on your end of day closing balance. So let's, at least with Take Profit Trader, if you close the trading day now with $400 in profit, then you have still $2,000 left of your trading drawdown, if you know what I mean. But if you start out, let's say then again on Monday, hang on, you should still have $2,000 of your threshold, because right now you started on a 50K account and your max trading drawdown was set to 48K. Only today, if you go below 48K, your challenge would be lost. But you don't do that. You secure your profits for the day, call it a week. You're up 400, so next week you're gonna start at 50,400 with your trailing max drawdown sitting at 48,400. Now your max drawdown should still be $2,000 right now, because it's not intraday. What you're saying right now would only apply to a Apex live trading drawdown situation, but you don't have live trading drawdown. Just because you were up 700 and you've lost 300 doesn't mean it's automatically deducted, like I just explained. Your max drawdown is $2,000 of your initial starting balance right now, because it's your first day. Now you make 400 profit and you continue on Monday, and once the end of day is over and all that stuff has pre-processed, in your TPT dashboard you're going to see that you have now your max threshold at 48,400. So always $2,000 away from where you left it off the day before. So let's say then you continue up till 52K and you start the next day, your max threshold would be sitting at 50K. If you reach that, your challenge is gone. It's always based on your highest account balance end of day. What you did is intraday, so that doesn't apply there. You can even lose the entire, can lose those other $400 and it wouldn't matter. It wouldn't affect. If you start the challenge at 50K on the first day and you close it again at 50K, next Monday you will still have $2,000 of drawdown, if that makes sense, because like I said, it's not being calculated live. I know it's a little brainfuckery, but once you get used to it, then, and the difference to the CFD challenge would be that your max trailing drawdown doesn't move up if you make profit or as you're making profit. So right now, for example, I'm up 5% on my 100K challenge, and those 10% max trading drawdown isn't moving up with me making profit. So instead of having just 10% max drawdown, right now I have 15% max trading drawdown, max drawdown. Make sense, day trader? I've still got some questions. Feel free if something is still unclear. That's what I'm here for. Let's wait for the news cannon to pop in 5 minutes. So what you said is true, but only for Apex. That's why it makes sense there to, if you made profit, lock in your profits. Otherwise, you're just giving away part of your margin, and you don't really want to be doing that unless you really know what you do. I mean, losing is part of it, no questions about it. But yeah, we have to control how often we lose, because on the future accounts we don't have so much breathing room. We're pretty much cave diving. If you watch some cave diving documentaries before, where they swim into those dark holes and they get stuck and suffocate or die, that's what it feels like trading with trailing drawdown. I watched that documentary and I could really relate to it. Yeah. Okay, Wednesday I was up 57.56. Thursday 54.8. Max drawn is both 48756. Yeah, because at the end of the day, if you only look, okay, you started the challenge. At the end of the day, when that data is being processed and updated in the TPT dashboard, then your highest account balance out of all these days is going to be used for your trading max drawdown. And because your highest account balance was 5756, yeah, it's part of it. That's the trailing drawdown, and that's why I'm currently working on getting funded with CFDs. It's manageable if you, I mean, with Apex, that entire situation is even worse, much worse, because, yeah, well, what we just talked about is, yeah, being calculated live. So even intraday, let's say you're up $500 and you lose 500 of that. With TPT, that wouldn't matter because it's calculated end of day. But with Apex, you already lost $500 off your entire margin. So I think there's 3 levels to it. Static drawdown, like with a CFD challenge, or most CFD challenges. Then there's end of day trading drawdown, and then the final level would be intraday live trailing drawdown. Still based on your overall account from, so if I purchase a 100k account with funding pips, I start out at 100k and my max drawdown is sitting at 90k. So 10% of the 100k initial account balance. Let's say I've traded it for 2 or 3 weeks and I'm up 6-7%, just 1% away from hitting my profit target. Then my drawdown is still fixed at 90k. It doesn't move up with you making more profit. So I could basically lose those entire 7% and I would just, start over again. So at that point in time, when I'm up 5 or 6%, I can actually lose 16% overall, but there's also 5% max daily loss calculated end of day. But 5%, I mean, that's really nothing you can complain about, in my opinion. If you're complaining about 5% max daily drawdown, I would consider really taking a good look at your trades you're taking, because, or your risk management approach. 5% per day if you have 10% overall to spare, seems a bit too risky. So we get news in 15 seconds. I hope you understood and the difference is clear. I would just say, day trader, go to my most recent YouTube video and put the, okay, we've got the news candle. Let's see what's happening here. We move to the upside. Make sure to participate in the YouTube giveaway. I'm giving away a 5k funding pips challenge, and then you can just try it out yourself. Or if you don't want to wait, I will draw the winner in the next video, which is going to be released this weekend. Just get yourself a 50k, a 5k challenge. They cost 30 bucks. And try it out. And see how you feel about it. Don't worry about the size of the account. It's just about, yeah, seeing if it's better for you. And then at least you can say, well, I've tried it. I don't really like it, but at least I've tried. And then that's out of the question. That's not a question anymore. So I think we just hit the breaker block, did we? No, but we filled in this entire bearish value gap. We did hit the breaker block, so let's see what's happening from here. Let the news play out. Not really interested in going long or short now. Like I said, if I would be blindly placing my limit order on that breaker block and I would have just been triggered, well, 15-minute time frame. We have a bunch of 15-minute fair value gaps, but I don't know. That's why I like to get in and go with the flow while it's bearish. Right now, I'd have to hope it's going to reverse again and switch over to bearish, if you know what I mean. Right here, it's already been bearish. I enter on a bearish inefficiency, and we continue lower and hit sell side targets. From that sell side, we had a pretty significant bounce. We basically reversed it completely, that entire drop, bouncing off the 50% of the gap. I hope you know what I mean with, yeah, now it has to flip over to be bearish again. Of course, it can still play out, but that's not your textbook 2022 setup. That happens right away, and we don't already drop first and then retrace back into our breaker and then continue lower. It's immediate. It should happen very quickly. If it doesn't, chances of it playing out are lower. But looks like we're still rejecting from the breaker. We'll see. That the news cannot develop. What did I want to say? Damn it. The only thing that I think is really important if you decide to trade with CFDs is to get this little risk management tool. Where is it at? Hang on. I'm using the trade assistant, it's called. Back when I bought it, it was, I think, only 50 bucks, 50 USD. Now it's actually 100. I think that's ridiculous. But, well, inflation and such. Nah, just kidding, but it's a great tool. I really like how you, can set your buy limit and adjust your stop loss, and based on that, it's just a great way to manage your risk. Yeah, I will do that. I've got that plan. I have it on my whiteboard. It's going to be, already that next video. I've done all of the other ones. And a few other indicators that I use to make MT5 a little bit more enjoyable. Not the biggest fan of it, but, well, also not the biggest fan of the live trading drawdown or end of day trading drawdown. So I take that and accept the fact that I execute on MT5. Right now I'm doing that all on my phone. The only issue I see with that is that risk management wise, well, for example, in a scenario like this, you decide, I don't want to enter with too much, maybe one lot, that's enough. Depends on, your emotional state and your confidence at this point in time. Not really a great thing. You simply want to use the risk management tool, place your limit order, say stop loss up here, and if it goes up to here, I want to lose 0.5%, and if it hits previous day's high, I make 1%. And yeah, you don't have to make the sometimes difficult decision right in the moment when taking the trade with what size you should enter. You get confused with the lot sizes. Okay, I'll make sure I include that in my video. Make it a, how to get started with CFDs if you've just traded futures before. Well, hang on, I just don't want to take an execution, but I can open it here quickly. Yeah, TradingView is pretty intuitive. Like, you look at it, you see what it has to offer, and it's very easy to apply. MT5, nah. Let's travel back in time together and go back to 2010. Oh, here we are. Now there's that annoying sound. So if you would have to do that all manually, then it's just much simpler to have a trade assistant like this. Let's say I want to enter short, place my stop loss above this candle's high, pinning my entry at, not sell limit, let me catch it, come on. Not sell stop, yeah, exactly. Now you see it's trailing with price. Move that over here. Let's say I want to put my stop loss right here, and I zoom out a little bit. Just have to, spend your hours, and then you eventually get used to it. You see how my risk management tool automatically changes, and depending on what I set it to, if I open this right here and say I want to risk 0.25%, it automatically tells me that 0.25% of my entire account would be $130. And then you just start to think in percentages instead of how many contracts you enter with and how many lots. Doesn't really, it's not really important. If you use a risk management tool like this, then you just hit sell and everything is automatically placed for you. Your lot size is automatically calculated. You see that right here, lot 0.25, 0.26. It's much more precise compared to mini contracts because you can enter with decimals. All you have to do to install the indicator if you want to do it over the weekend, day trader. NQ is, that's broker dependent. Usually NDX 100 or NASDAQ, something like that. US 100, that's also sometimes what it's called. All you have to do is you go over to here, file, and then open. Now actually, if you buy the indicator, you have your navigator here in MT5, expert advisors, and then you open up the market tab. So go over to expert advisors, market, and then that trade assistant should pop up, and you simply drag it to your chart, and then it's applied to your chart, and then you can modify all its settings and use it. But use it on a demo account first. I did it immediately on a live account, and I cannot recommend it. It's not worth it. If you don't know what you're doing, you shouldn't be trading a live account. It's like giving, someone, that's hard to compare. It's like giving a gun to a child, hoping nothing bad is going to happen. Similar to that, I'd say. So make sure to practice on demo first before you take it out on your challenge. You want to feel comfortable enough to execute there and not wonder if you're doing everything right at the moment. So yeah, that's just my advice. Exactly. Learn to walk before you can run. I mean, we're in no rush at all. I'd say I had the fortunate experience that I already traded with MT5 before. That's actually how I started with Forex and stuff like that, with my Forex funds, also a CFD prop firm, before I made the transition over to futures. So I already know it all about lot sizing and how that works. Yeah, it just takes a little bit of time, doing some research, going on a paper trading account. You can sign up with FTMO for a free trial account and then simply test what happens if you go in with one lot size. Okay, if one lot moves 10 points, how much do I make? Write that out on your notepad and memorize it. Okay, if I enter with one lot and it moves 10 points, if the SPX moves 10 points, I'm in with one lot. How much money do I make? How much money do I lose? Okay, if I do the same thing for NQ, if I enter with one lot on NQ, how much money do I make if it runs 10 points, or NQ runs more than 10 points usually? Let's say 50 points, leave it at 10, because from there on you can, say if I enter with 0.1 lots and you just divide it by 10, and I don't know, you kind of create a manual risk management table. That's usually what I had sticking at the bottom of my monitor, at the bottom of my screen, to see exactly, okay, I have a 5 pip stop loss or a 5-point stop loss. Only as that would be if you trade the SPX. Is MT5 still open? Let me zoom in here. Yeah, now that's also an indicator right here with the scale that the chart is automatically, focused in the center. So let's say you would go in with, let me get rid of that, I don't want to press a button here. So let's say, for example, if it moves from 8.7 down back up to 9.7, that's a 10-point move. How much would I make with that if I enter with a given lot size? Let's say I have a stop loss of 10 points. What would be an appropriate, lot size? And you want to test that definitely on a demo account. Just really, starting to spend some time if you consider switching, or I mean, I'd like to call it diversifying with CFDs instead of switching to CFDs. And there's no point in not continue to trade on your Apex or take profit trader accounts, funded accounts. I'd look at it as a addition to already existing funding accounts. Just put in the hours. Doesn't take many, like, I don't know, couple of hours. Researching what's a lot size, what's a pip. Getting used to that type of thing. What's a CFD? What's the short for, what's a little tag for the ES1 and the NASDAQ with your specific broker? What's a contract size? How do I execute? Stuff like that. Black Bull has demo too. Okay, good. I don't just do it with Black Bull. Hi, H. Smith. But yeah, that's the best advice I could give you. One video is, I mean, you watch it, but it's not going to be as thorough as, really spending the time after that. I'm going to go over how to install indicators and stuff, but if you want to set it up over the weekend, I mean, just type in YouTube how to install indicator on MT5. Quick and easy guides that explain all about it. Like I said, once you purchase it, if you even want to make that purchase, I mean, it's $100. That's totally up to you. You can also do it manually, but yeah, I would suggest doing it with a risk manager. Yes, before the New York Open right here. But like I said, right now I'm not anticipating a massive continuation right away, at least. We already talked about London with a big range, and then we looked at the 4 drives pattern. First push, second push, third push. Agent Smith, nice that you're there actually. Earlier we short from Tokyo. Why? Did you average in or? So if you average in, then I'd say it's perfectly fine. Yeah, okay, 1 micro. What a good night's sleep. But what I was about to say is, yesterday you said stairs up, elevator down. And I said that I don't really see the stairs to the upside. If you compare it with today, you start to really see it. Our first baby step, taking a big step to the upside, going sideways, taking that next big step, going sideways. I'm not including this, it's just a metaphor. Going up again, going sideways again, going up again, and then taking the elevator down. You really want to see those pushes to the upside. First push, second push, third push, fourth push, each with higher lows, without lots of mess or stuff in between that might make it much harder to actually identify the steps to the upside. And then if you invert it on your chart as well, should be a nice and steady downtrend. Then we get our displacement with a nice fair value gap. We hit a higher time frame point of interest, the previous week's high. That's really where you, let's say if we wouldn't have hit that previous week's high here and I would have seen that setup, nah, I would have likely not taken it. Now, like I said, we already moved a lot. London traders have been long in the market. Early New York session traders with that last fake out move to the upside, that last push. I mean, we can look at the volume profile, so it makes more sense. Let's start right here from the low. Nah, not what I wanted. Fixed range volume profile. You can see that the majority of the volume has transacted up here. And those are the trap traders from London. Well, that's where the place where the most amount of transaction has occurred. Right here around this level at 4,831. We understand that those are trapped. Retracing it back up into this area would offer them a chance to get out at break even. That's why they quickly reverse it on them to hunt all their stops. Now that this job is done, and given that we have already moved a lot during London, and we already saw the short right with the open, usually what happens, I don't want to say usually, but with a higher probability, all we're gonna get for the remainder of the AM session is chop. Basically building a new base before we go into the PM session. So, okay, shorts have been liquidated, more shorts are triggered into the market. Let's just go sideways here, let those fools go long and short, long and short, long and short. We make nice money with all the commissions, and when the time is right, we start moving it again. Exactly. Wicked to death. And that's yeah, also most of the time the area where traders get chopped up, they see, oh, it already moved so much to the downside, it's not going long anymore. Let's go long. There's a group of traders that try to take the reversal, a group of traders that try to take the continuation, and both get chopped up in here because it rejects and immediately goes back up. It goes back up and immediately rejects, goes back up. Of course, we could be also forming a double bottom here. I mean, we just swept sell side in a discount if we look at the entire daily range. If we want to continue higher and take out the high of 2023, December buy side, we missed that by one tick right here. If you take a close look, then yeah, I think that's still in the cards. But it doesn't have to happen during the AM session, similar to what we saw yesterday. The majority of the AM session, all we did was chop. Why? Because we already saw the move to the upside. We already have seen the expansion. We saw the early stage accumulation, manipulation, reversal, early expansion, consolidation, next leg higher, and then large range chop before repricing into a deep discount, filling in the regular trading hours opening gap, trapping shorts, and then reversing it up like, everything that happened here prior to this doesn't exist. But we were able to capitalize on that move to the upside. I'm excited for this week's recap. I'm gonna start recording that after this live stream. So let's see where we're at. We repriced into all the higher time frame inefficiencies we had, repriced into our regular trading hours opening gap. But we can also see that this is the New York Open. We haven't done much so far, if we're being honest. And as we go down, we go back up, reject again, around the VWAP. Like I said at the beginning of the stream, the reason why I took this trade on paper and only my funding pips account, not on the TPT challenges, simply because it's not worth the risk to me. With the trailing drawdown already up $1,000 on that 25k challenge, so I have $500 left for next week, and taking that entry prior to the New York Open with that much room to breathe, didn't feel like it. And based on the fact that I try to trade as little as I can on Friday. Back in the day, those usually have been the days at the end of the week where I got carried away. I took the first losing trade, and then I just tried to force my way back to my initial account balance. Once I've got there, I usually didn't stop and kept on trading, making it worse again, and then never ending story until the market is closed. And then you have you're super exhausted, you're disappointed that you didn't follow your rules, and you're gonna carry that over into the next week. So all of that is not really worth it. That's why I try to play it cool on Fridays. With the ICT all-in-one, I updated the script and updated the power of 3 indicator. All you have to do is go to the settings and turn on power of 3 and modify the time frame right here in the power of 3 settings. Choose the time frame, choose if you want to see fair value gap and volume imbalances. I think it's a great tool. I don't have to switch between higher time frames. I simply see what the hourly is up to right here. I'm ready for the weekend, I can tell you that much. Big wicks, big range. what would be that first potential confirmation that we go back up? I would say close above this bearish fair value gap. So far we've been bouncing into it and respected it. If you manage to close above this one, that would be your low risk entry, where you enter with a small size. And once we continue higher, invalidating this bearish fair value gap, holding support on it, you could start to add some size to your trade, walking it up, going with the flow. Like I said, that's why I'm not interested in placing my limit order right here on the breaker block and leaving the charts. I said that earlier too. If we already reach sell side before we reach the breaker block or this fair value gap, then I'm not really interested in this trade anymore, because, well, we already hit sell side, and to get back up into here we need bullish order flow. And then I would have to hope that it's going to turn around from this area again while being in bullish order flow. I prefer getting in around this area while being in bearish order flow. Going with the flow. 1 minute time frame. Anything obvious? Nope. Otherwise, yeah. Well, I think we're at that 50-50 point. Around the 50% of our entire daily range. Filled in parts of the irregular trading hours opening gap. Market structure is bearish at the moment. But yeah, we already cleared sell side. Of course, if we would flip it around, well, it would even be ugly if we would be looking for longs right around here. So now, for the AM session, that's definitely going to be it for me. And I really think it also should be for you. Think about it. It's not worth it carrying that emotional baggage into next week. If you mess it up inside of this job, just take a break. If you want to continue to trade today, come back for the PM session. Not saying that the move for AM is done. I could be wrong about this, but it's Friday. There's going to be a new trading week starting next week, a new trading day. We don't have to force it on one specific trading day. We have to think in bigger picture. Oh, you better put on your undies. Thank God this is not a video chat. You should do an OnlyFans and call yourself the Naked Trader. The Naked Trader, without indicators on the chart, without clothes on my body. Let's go. Well, that's the way setting goals. In the same way as you've set this goal, Agent Smith saying by the end of the year I have the body off to do that, just not now. The same way you have to think about your trading account. You don't have it now. You don't have to have it now. If you would try to lose 20 pounds in fat and gain it in muscle mass, well, today that's not possible. But over a bigger time frame, yes it is. In trading it works the same way. You can't force too much out of a single trading day. Of course you can try and you can pass your challenge and stuff like that, but it works, but the risk involved with it I think is too high. It also depends on your level of expertise. if you've never passed a challenge before and you're trying that approach, then don't think that's the best decision to make. You want to already, have received some payouts and have an easy time working your way up to pass these accounts, and then maybe do that because, trading is just too simple for you and you know what the market is doing, you're in tune with it. Sure. And you might not be trading on a live trading drawdown account. That would also help. A static one would be much better, or even an end of day trading drawdown with enough room to breathe. Day trader, Kiefer, Agent Smith. Who else was in here? I have the chat open. Simo, RM7, SBG, Vagelis. Any more questions for this session? Because otherwise I'm gonna call it a week. I'm gonna start recording the weekly recap. I'm gonna call this my 2024 mentorship, because in the last video, last recap, I really put everything into it. We explained every trade, every reason behind it, why I took it, some other things, trades I didn't took, why I didn't take them, setups that formed like a 2022 setup, silver bullet, so much stuff. It's over an hour long, and I think that deserves a title mentorship instead of just weekly recap. On a weekly recap, you're like, oh yeah, this and that happened, blah blah blah, but you don't really go into the detail of it. I'm also not doing that over 10 different charts. I'm putting, all my focus for an entire hour to recap years one. Yeah, but are there any questions? I'm gonna get myself some water, wherever it is. That's out here. That's it. All right, as we can see, price is still within its consolidation range. I think it's a I think it's a gamble trying to guess where it's gonna go. You would find arguments for both, for both outcomes. You always do, of course. If you have high conviction, of course, then I don't wanna hold you back from taking a trade, but might be better off, skipping the rest of the AM session. If something major happens and we continue to drop 100 points, so be it. Who cares? You're gonna miss plenty of moves. If not, well, you've did something else you enjoy or really had to get done. Come back for the PM session with a fresh mind, reset happening, and then looking at the chart. I know what's going on here. I can capitalize on that. Boom. One and done. If I would have to guess, I would be forced to guess which way it's gonna go. Let's wait a little bit before I make that call. What do you mean, let me comment? You want to do it like, no, you have to go to work. You can also take over the stream if you want. I'm gonna start. What point specifically do you want to emphasize? I do not understand, sir. How important it is to ... cliffhanger end the weekend positive. Yeah, sure. You should be able to join the stage. So if you guys want to stay for Agent Smith talking a little bit about his experience and the stuff he learned, feel free to stay in. I'm gonna end well, I'm not gonna end the stream. I'm just gonna mute myself, listen to Agent Smith, and do my stuff in the meantime.